All right, you are looking at the daily chart of the Nasdaq, and I'm going to just go over briefly the same review I do every day, and that's just the course that we're on here. This cup with handle breakout here, essentially about right here, May 10th to July 19th. We had a nice 18% move, and then we had this double bottom base here on the pullback, which was 12% peak to trough, from 14,446 down to 12,963. And then it retested this level here on this day at 13,008 and now has moved higher. So we had a follow through day on Friday, and today the market started off weak and closed strong, which is what you want to see in a new uptrend. You could see the Nasdaq recaptured its 10 and its 21 and is now 1.1% below the 50. Now today we had light volume. The bond market was closed, and typically when the bond market is closed, the indexes or the stock market does better because degenerate gamblers have to buy something, so they bought stocks today. And the SPY has the same type of look. It's not as strong as the Nasdaq. As you can see, it's still fighting with that 21 EMA there, and it's 2% below the 50, whereas the Nasdaq is 1.1. But same idea, the big uptrend, and then the pullback here, the double bottom base, and now it's trying to fight through and start a new uptrend here and getting through the moving averages. Anyway, I look at stocks. I'm a stock trader. I'm a trend trader, momentum trader, and I need a trend to do well. And we had this nice long trend. This is Apple, and then it ran into some consolidation. You can't expect your stocks to go up forever and ever. Although this one, if you look at the monthly chart since 1998, sure has been a big winner, hasn't it? But recently, you're trying to trade this thing, it hit a high of 198, pulled back. This one formed a double bottom base just like the Nasdaq, but this one is ahead of the Nasdaq because it's sitting right there, closed right at its 50 today, which is 179.05. So Apple looks good, not as good as Microsoft though. This one's consolidating in a base, and you can see the difference there. This one's already traded above its 50 there, and it's 1.5% above the 50. So Microsoft a little stronger than Apple, right now. These things changed. That's why I watch them every day. Not too closely though. This is Google, had this nice cup with handle pattern, and then ran higher. Gave a pullback here below the 50, and then did the Debo and ran right through it. To me, it's probably going to start, have a new buy point there at 139.16. Which it hit on what day was that? The 18th. Okay. So yeah, needs more time, but definitely watching Google. That one looks good. Meta was on our watch list recently. As most recent is today, I believe. And gapped higher. You can see the consolidation pattern is on this one after a long run is up over 150% in 2023. There you can see the bottom where everybody hates it, and then it trades sideways for a little bit, and then just blasts higher here in 2023. And recently, it's consolidated in this base. And today, I had a buy point here at 300, and I thought you could buy this thing up to about 315, but now it's kind of chasing it here a little bit. Definitely, if it kind of just trades sideways for a few sessions, it might allow the moving averages to catch up, but it's 3.5% above the 10. So, yeah, I wouldn't want to chase it, but it's still setting up in a base, still consolidating, and has earnings here in a couple of weeks on October 25. Amazon, this one is the weaker of those ones that I just mentioned. You can see the double bottom base pattern, just like the Nasdaq, but this one's below its moving averages. So Amazon is struggling. Tesla, another one of the Magnificent Seven. I don't know how long the Magnificent Seven is going to be around, but it'll fade at some point. And right now, these seven stocks are, pretty much drivers of the index. So, you got to acknowledge them. And Tesla is just, pulled back to its 50 on Friday, did it again today, doing nothing wrong. I know people get bored and tired of stocks just going sideways, but to me, Tesla looks really good. Setting up. NVDA was weak today. Geopolitical news weighing on the semiconductor stock. Had a little problem with the 50 here, and you expect that to be resistance, and it's 1% above the 50 at close there. So definitely want to see it, blast through there with some conviction here and some power with some volume here. But 502.66 would be that standard buy point there for NVIDIA. Anyway, I think I covered all of them. The Magnificent Seven. I'm going to go down the negative road and bring it back on the positive track today. With the geopolitical news, you had to know that the travel stocks were going to get hit, and they did. This is a Carnival Cruise Line. The leisure services stock was down more than 4%. It gapped down below its 200, and that acted as resistance today. This is to be expected, right? Or what is it? The other one, RCL, Royal Caribbean, down 3%, doing a lot better than Carnival though here. And this one, just pulling back after this breakout, the nice run, it's consolidation. But you got to expect the travel stocks to get hit when you have news like we had over the weekend. And this is Alaska Air. These things have been in a tailspin for a while. Excuse the pun. Southwest Airlines, man, that one looks rough. Delta, which was one of the leaders, just you can't stand prosperity here. From 49.81 down to 35.28, below its 200. Yeah, below all moving averages. Moving averages all trending lower. That looks really bad. But anyway, let's take you back on the positive path, and that is the oil and gas stocks, the energy stocks, coal. They were all strong today. This is Chevron, which is still just consolidating in this huge base. This is a big stock, slow mover, pays a big dividend, and it was up nearly 3% today. ESTE, this one, okay, I got it. So it broke out of its base and pulled back to the 50 for the first time, and now it's ramped higher 3 days in a row. So that's why I wanted to point that out. First pullback to the 50 was a gift, and it worked again. For Earthstone, which I don't know much about the stock, RRC, which is Range Resources, U.S. Oil and gas, U.S. exploration. And this one, you got to look at the weeklies on these charts. I don't always do that, but you can see the huge consolidation, pullback, the shakeout before the breakout. I kind of like this one. This one is on our watch list at mcstockcharts.com. INSW, I wrote this one down for a reason. Oh, set up in a base. Looks like a base on base pattern here. Yeah, base on base. I'm always leery of these base on base patterns because they tend to base forever, but it did it before here. You can see this base and then another base, then the ramp higher, which was a nice move from 25 to 48. Yeah, it's a two-bagger. So it has that potential to make these big moves. So that's why I wrote that one down. INSW, this is oil and gas transportation pipeline stock with lots of cash flow and return on equity, good balance sheet. So that's where I wrote that one down. And then Tidewater, one of our leading stocks here. If the oil and gas stocks are going up, this one's likely to be trading higher. It did pull back here to the 50, and then now has moved higher the last 3 sessions. So Tidewater looks good. The energy coal stocks, man, I'm talking about this for a while now. Clear and distinct pattern there. They ramp higher, and then they give you this little couple session pullback to moving averages, then ramp higher, couple of sessions back, a ramp higher, and then, this one was 3 or 4 sessions as it pulled back to the 10, then it ripped higher, and then what did it do? 3 sessions back, and then now it's up for the last 3 sessions. Actually, that was 4 sessions in a row. Ooh, big pullback there for AMR. CEIX doing the same thing. It just gives you, after this breakout here, it's not pulling back to the 50. It just gives you these little couple of session pullbacks. That's it. And then this one was 4 days, just like AMR. And then, of course, has been up the last 3 sessions. Today it had decent volume. Arch is another one. This one looks better. You got to look at the weekly charts. I'm sorry I don't show you the weekly all the time on this daily review, but you can see the long period of consolidation. Arch was $176, $180 stock in May of 2022, and now it's $160 stock. It's just been consolidating this entire time. Nice symmetrical cup shape pattern there. There's your handle, the shakeout down near the 50, and now it's starting to move higher. So Arch looks good to me as well. If you want to oil and gas, energy stock, energy coal stock, which I don't own any of these, but definitely a distinct pattern here. Same with Warrior, these pullbacks, right? Had this little cup shaped pattern, then pulled back, and then ripped higher, then pulled back. Probably going to continue to do the same thing like its brothers and sisters, AMR and CEIX. Anyway, that's it for the oil and gas, coal, energy, blah, blah, blah. If this follow through day is going to start a new uptrend, you got to look at the stronger stocks, the leading stocks, and there's got to be stocks set up in bases that are going to move. Otherwise, you can expect it to fail. So I've been looking around at some stocks that are set up to move. I think that could possibly be movers, as if this uptrend is for real. This is AXON, security safety stock. You can see the chart pattern there. It shows up a little better on the weekly chart. That one looks good. Duolingo, this one's been on our watch list for a while. You can see the double bottom pattern here, moved out 6% today. That one looks good to me. I know there was a narrative that ChatGPT was going to kill Duolingo, but the stock is doing well. And you can see the volume here, the big blue volume bar. So somebody's buying that thing, not Aunt Sally. Then we got to go to the cybersecurity stock. Once again, you got to go to the weekly here. CrowdStrike's been in a base for quite a while, and I know people got tired of it because it's just going sideways and sideways, but it had no sell signs. I know some people, were just saying, I'm getting tired of holding this stock. But, then all of a sudden it moves higher on Friday, then follows through again today. So sometimes you just got to be patient with these things. They don't know that you bought them. So, they're going to move at their own pace and not when you buy them. So if you bought CrowdStrike there at 159, 160 and just kind of held on to it, you were rewarded. Like I said, there were no sell signs really here. It did trade below its 50 for a little bit. But since this date here, when it rallied back through its 50, it showed no August 31st. Yeah, it's been pretty consistently trading sideways. And I know that's 6 weeks of sideways action. But, sometimes you just have to be patient with these things. Palo Alto Networks. This is more of a distinct, just consolidation pattern. It sold off for no real reason, except for there was caution ahead of they reported earnings on a Friday. And people thought it was going to be the Friday afternoon, news dump. But it happened to be a good earnings report, and it traded higher, then pulled back below the 50. But to me, it's just still within a consolidation period. It's still near a buy point. There's your 14-week consolidation. So it's consolidation, a little move up, and now more consolidation. But Palo Alto Networks is definitely a quality stock. Zscaler, same thing. Consolidating sideways, just like CrowdStrike. But today it had a high there on Friday of 163.60 and a low today of 165.50. So there's a gap there in the chart, which concerns me a little bit. Like to see it fill it, then trade higher. But this one looks good too. And you can see it's just been trading sideways since the middle of the summer, beginning of the summer, actually, at that 162 there. So, just consolidation here. Nothing wrong with that. You got to expect these after a big move from 84 to 162. It's a two-bagger. It's going to, take some time to digest those gains. And I do like the weekly setup here. See the huge sell-off, long period of consolidation, getting above those moving averages. Zscaler looks good. Oh, another one that's on the list that I like is Arista Networks. It's a networking company. Broke out, ran up to 198, then pulled back to the 50 for its first time, and then found support and now ran higher. I think, probably another buy point here. for the Johnny come latelys would be 198.70, and it's got to, blast through that 200. I expect it to have a little difficulty there with that psychological number, but Arista Networks looks very good to me, and I'm remiss if I do not show you the weekly. And you can see how it bases, runs up, bases. There's a base on base, runs up. Now it's had some consolidation here, and probably going to take some time before it moves higher. I expect it to have trouble with 200, but it's going to do what it wants to do. Like I said, it could rip right through there. Bentley Systems, this one's setting up in a base, which I like. I really like this stock. I'm sorry I didn't buy it. It broke above its downtrend line. I just didn't move quick enough on this, but I still think, it's not moving that fast. It's still, buyable as it broke above that last week. And it's been up the last 4 sessions with some strong volume. So Bentley looks good to me. There's just some other ones here. I'm just going through some stocks I like, some stocks on the watch list, some stocks setting up. Because like I said, the market's not going to go up just on fumes. They've got to have some quality stock setups. AKAM is another one that people are getting discouraged with. It's just consolidation and pulling back on lighter volume. You can see the volume really drying up here as it forms this little bull wedge. And then one day you'll wake up and it'll be up like 6%. So that one looks good to me. VRT, another one of those, networking, what do you call them? Data center stocks. Another, bull wedge. This one's a little bit ahead of Akamai. Had this bull wedge and now it's starting to move out, volume coming in. Obviously, it had big volume on the earnings gap, which I'm going to get to in a little bit because we have earnings season coming up. Pens is another one. Pinterest. This is a blast from the past, a 2020 stock. You could see that thing really ripped. I guess I can go to the weekly on this. Yeah, look at that move on Pinterest. Yeah, it was 2020. You could just throw a dart at stocks. Yeah, from 13 to 89, what I call it, like shooting fish in a barrel, right? You couldn't go wrong. But it had that big sell-off and now consolidation. It's got the double bottom pattern here, kind of like the indexes, and trading near a buy point. So that one looks good to me. Another one that I'm just putting on our watch list today, it had this double bottom base and the gap higher. But if you just look at the weekly on Elastic, it's a software stock. So it sold off in 2022, with the Fed-induced interest rate bear market. And now it's forming the stage 1 base here with a cup with handle pattern, even though it had this big move on this week here of 23%. That's not to be ignored. It just kind of trades sideways, allowing the moving averages to catch up. You can see that now they're catching up here as it traded down to its 21. I really like this one. And it went up with the Splunk news when Cisco bought out Splunk as well, because it's in the same sector, the computer database sector, as Splunk. Anyway, that's it for today. Stay safe out there. War is a terrible thing. Nothing good happens from it. And I'm really say a prayer for the people in Israel who are attacked by Hamas. And I do have one more thing in honor of the great Steve Jobs. We have earnings season coming up, and I have a stock that I'm interested in because, if I just look at the monthly here, you can see Domino's Pizza has been a huge winner since the financial crisis. What, it went from $4 to 300 or 560. That's a massive winner stock. Yeah, it's pulled back recently. But I'm interested to hear what they have to say. I mean, obviously during COVID, people are, the restaurants were not doing great, but they do deliver. Domino's delivers. And I just want to hear how they're doing here, because they do have dine-in restaurants and they have deliveries. So earnings season brings us some of the, big moves that you got to pay attention to. Abercrombie and Fitch is one of them. Gapped higher in May, made this big move of 31%. And if you ignored it, this thing went from $30 up to, 43, and then had another gap higher on earnings recently on August 24th of another 23% move. And you think, oh man, this thing's done, it's going to pull back, and it just trades higher. It did pull back to its 21, but that's why earnings season is important to me. We're trying to find these power earnings gaps here, and they're, catch one like perhaps maybe a Domino's this week, or Abercrombie and Fitch later on. But anyway, thank you for watching at mcstockcharts.com. We never give up.